Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. Tonight's webinar is live Forex market review. So let's get into it. First up, we'll have a look at the risk disclaimer. Please, everybody read through the disclaimer. Now, if you're on our YouTube live stream, I cannot see the chat, but you're welcome to join us. I've given you a link there. For those in the webinar, I've got the chat box and question and answer box open. You can use both to talk to me. So just take the time to read through the disclaimer before we move along. All right, we might move along. So if you're new to the webinars, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities. And a full-time Forex trader. I've been trading now for more than 15 years in the Forex market, mentoring for more than 10. If you want to contact me, my email is there on screen, duncan.cooper@acy.com. Through the week, if you want to connect with us, you can go to acy.com, go to the market news tab, or our YouTube channel, ACY Securities Australia. If you want to connect with me personally, just head over to my Linktree page and you can connect with me there. If you'd like to get access to my MT4 webinar charts that I'm using, contact nathan.bray at ACY. His email is at the bottom of the screen, but I'll put that in the chat for you. So any questions about webinars, getting the platform I'm using, setting up a demo account or a live account, just contact Nathan. He'll help you out as much as he can, I'm sure. So his details are there in the chat. All right, so let's get into it tonight. So we do have some strong news coming out this evening from the US. So this is forexfactory.com, time shown in my time, Queensland time. Now we have the US core CPI and CPI coming out 11:30. Maybe expect that to tick up ever so slightly. So it's going to be highly volatile after that, especially if it doesn't print as expected. So you might want to wait until that's come out before you trade today. It's up to you. It will be volatile when that comes out. And then tomorrow we do have further CPI news from China. And then we also have further inflationary core PPI and PPI data from the US tomorrow. So it's inflation figures from the US today, tomorrow, and we also have China CPI data coming out 11:30 in the morning. Expecting that to be on the downtick. All right, so be very much aware it's going to be volatile today and tomorrow from the US perspective, which will affect all the pairs to the US dollar. All right, let's get into the charts and let's just see what the dollar index is doing. I've been looking for a higher bottom to form here in the day chart to confirm. And really price action has been, well, to confirm this reversal, but price action has been holding within Friday's range, the non-farm payroll event. Prices really just stuck within the range that got formed that day. So it's not really confirming a higher bottom yet and an upward move. Maybe today's data will. But what we are seeing on the monthly chart here is a pullback to support, 79% retracement from a higher top. So are we forming a higher bottom here on the monthly over the long term? And we could be forming a left shoulder, inverse head, right shoulder pattern here for a move up. So 110.70 is the level to watch. If that continues to hold as support, potentially we're going to see some further US dollar strength coming in. And if inflation comes in worse than expected tonight, so inflation is upticking, that's going to be strength to the dollar. Because may not rule then maybe another interest rate hike, or at least it's going to rule out for the short term an interest rate cut. All right, so on the day chart here, I'm just looking for some form of a higher bottom base to form, which could then start to confirm that we're moving back up the range, okay? Not quite getting that at the moment. S&P 500 did move up. It's actually moved up to a new high for this year, over the top of last year's high here. Pretty sure that's last. Just want to make sure I'm not telling a fib. All right, that was, in fact, no, I am telling a fib because, well, that's 22. 20, what was 23's high? All right, this was 23's high. I just wanted to make sure that over here wasn't anything to do with 23. All right, so we're going to a new high this year from last year. And this is the all-time high. So that's January 22. We could most definitely have a struggle if we manage to test that level. We've had a bit of a struggle already. If you drop back to the daily chart, had a hefty sell-off just short of that area. So even though we traded fractionally above that December high there, if we show a reversal candle today, let's say the inflation data comes in and picks up, we'll probably get a reversal candle, and then we could maybe see a double top forming there. And we could be classing it as a major double top to 22 top. We'll just have to wait and see how price negotiates this area. For me, it's not an area you want to be buying in because you're buying at the highest price the stock market's ever been. Sure, if you bought maybe down at the bottom here on this maybe false break of the swing point low, at least now you're risk-free and you're asking yourself what's happening up here. Is price going to break up and through, or are we going to hold and move back down? So if you're not in the market, you're probably looking for a reversal here. Is the market going to fail at the 22 high or at December's high of last year's high for a reversal back down the range? So be interesting to see what kind of candle comes around today after the inflation figures. Right, so the inflation figures are going to determine as to whether we can pop above the all-time high or not in that area there. All right, let's get into the euro dollar. Like the dollar index, the euro dollar is still trading within, I said this on Tuesday, there's Friday's job figures candle, quite a large one. And we're just trading within the range of that whole day at the moment. We're really waiting for the data to come out from the US. So it is difficult. Prices go anyway after the inflation data, depending on what the print is. But I would be watching if price can spike up. 110.17 is the closest significant resistance level that the market has tried to move above and then move back below. So that would be the sell zone at the moment, 110.17. And the buy zone will be down at Friday's low, 108.76, and down to 108.52, this area here. Now, just break it down to 4-hour chart. If we draw a fib from that high to low, we're at the 79% area of the Friday's range, just starting to trade back below. So we could be topping out up here. I don't know what the figure's going to be. If the figure prints today very much close to what we're expecting, maybe the market won't be volatile at all. But if it doesn't print close to what we're expecting, then yeah, I'm sure it will be volatile. So putting the news aside, then we are failing at this 4-hour area, 109.78, and starting to move below the 79% level. So putting the news aside, looks like we're selling off and maybe want to have a move down. But I'm going to be waiting until the market has passed the news. All right, we're failing at 109.78 here. So later in the day, you may see a retest of this level that you could then trade down from. Quite clear at the moment. Just want to go back to my 4-hour charts. That's probably Monday's high that we're failing at. All right, so Monday's high is very expensive within the range of Friday's range. Moving back below the 79% level here. So we could be moving back down the range for the rest of the week, depending on the news coming out later. All right. Euro yen has moved out of its larger range, popped above this area of resistance that it was forming, has popped up to weekly resistance over here, 159.75. And this fib, I know it's not from a significant high point drawn, but it's actually drawn from last month's high to last month's low. You could be drawing a fib across this major range. And we're just been a fraction short of the 62% level. So go to the weekly chart here. We're coming up from a lower point on the weekly chart. So are we coming up to search for and form a lower top? We'll have to wait and see if we hold here and start to see some downside price action. But this could be left shoulder, head, right shoulder, 62% retracement. And as I said, on the 4-hour charts, I have my monthly highs and lows drawn in. So that's last month's high line here. It's coming through this area here. So I like to monitor last month's range, which is from there to there. And think of it, that's the whole candle for the whole month. And we've retraced 79%. Often we'll hold at the 79%, put the higher in for the month, and then trade all the way back down and put in a fresh low. So if we start to see if we are actually holding at 159.75 at the moment, but if we start to see maybe the 4-hour trend change its structure to down from that area, then I would be looking for the opportunity to get short from that 79% level. Trying to get rid of that block. All right, so we're high up with it, 79% retracement within the range of last month. That's often a topping out place. Well, then a move back down. Now, of course, we can continue up higher, but I'm just going to start to watch for price structure here to maybe form to the downside. And over the next 24 hours, you could be watching 159.75, the weekly resistance level. Do we continue hold and fail? We've moved below, held, came back up, held. So twice sellers are holding it there at 159.75. So after the news today, any further failure at 159.75, you should be looking for your setup to sell, to trade down from that key resistance level. Right, so euro pound, it's a bit horrible. I was signifying on Tuesday that maybe we could come up and hold at 86.09, popped fractionally above, but true reality is we have moved back below 86.09, so we're probably seeing a break down to the downside now. We'll move this to a day chart. Putting maybe some form of lower top in here. So today you may see the opportunity for price to come back up to 86.09. It's only 10 pips away. That's where price is holding at. Yes, it's been trading above a little bit, but that's the weekly resistance level from over here. Go back to my day chart. This level over here is starting to want to offer to be a resistance area there. In all probability to hold to move down to 85.47 for a test. So you drop this down to a 15-minute chart. This is a slight imbalance here. So we could well come up. Just want to see where the 4-hour range is. I'm just going to drag a fib down from that false break above. Back to my 15. All right, so 86.09 is the resistance level, and you're at the 62% level at 86.11. So that would be the zone to watch today if we rally back up. We will rally back up to fill this imbalance that we formed just here. And then can we just come up to resistance levels? Also set the central pivot point there at 86.09. All right, so it's saying 86.09 for the central pivot point, and that's 86.09, but they don't seem very close together, so I'm not quite sure why they're not overlapping perfectly, but in any event, 86.09 up to 86.11 is the area that I would watch for a rally point. Overall trend is down on the day chart. This could be the next lower top forming on the day chart up here. All right, pound dollar. Now, I've been suggesting, just to go into the weekly chart here, that we could be putting in we've had a major move down this way. Is this rallying to hold here at the 62% area of that range, fractionally above it at the moment, to move down this way. Now, very range bound, as you can see. From that failure in late December, we've moved down to that point, and we keep trading into the 62 to 79% area for our chart. False break in last week's high. We've already had an entry read on the 4-hour chart when we had a fresh high and then broke the low of that candle to the left. That was your entry stop above the high. So you still got the opportunity to get in, really. Price will probably pop back up to at least the low point of that candle there, so you can still get the same entry, but we're false breaking all these highs to the left. All right. So if you spend some time looking at where price keeps failing, this whole area here is resistance. All right, so we popped maybe 1 pip above the whole area today, and it's starting to sell off, failing at last week's high. So we could have seen that's just the highest point now. Are we going to be going this way? So if you start to see some downward pressure today, have a negative candle today following the US news, then from a negative candle today, tomorrow you should be looking for opportunities to try to sell any kind of intraday rally. All right. So that's what I think is happening here. It's just a question of looking for your setup to sell in the face of the US news coming out a little bit later in the day. All right. So you may see a retest of last week's high during the day, but if we further hold there today, then I would be looking in this area up here for further failure to move down. Now the pound yen has moved above its resistance area. Again, I'm monitoring, this is the same thing I'm doing on the euro yen. I'm monitoring the range of last month. It's popped up to the 79% area of the range of last month. To the day chart of that move down, in between the 62 to 79. If it came up further to 186.45 to 79% level, that overlaps with this weekly high over here. So that would be a very good area to look for reversal. So now that it's popped above this range, if you're not already long, life's difficult to be long because you're coming into you're in the sell zone area of the fib structure at the moment. So if you're already long, great, you could be at risk free, seeing if this is going to continue up. The day trend is up here, and the weekly trend is actually down. We've moved to a lower bottom, so we could be coming up to form a lower top, like I was saying on the euro yen. So weekly's down, corrective up at the moment, and the day chart trend is up. For our chart, I am monitoring last month's range, so last month's high is here. And like I was saying on the euro yen, we're at the 79% level. So if we see the euro yen fell at 79% level and the pound yen fell at 79% level, then we'll see two correlated pairs moving down from a similar area. So if you start to see the structure on the 4-hour chart change to down, then this could be where the high of the month is forming. So it would be a good opportunity to get short if we start to see structure change to down. So I'm not seeing that yet. So with the weekly trend being down, and this whole move up is just corrective of this overall move down this way, I'm not looking to get long. I'm just waiting to see if I get a signal to say, okay, start to engage the downside. So just watching the 79% area, seeing whether some kind of structure starts to form around that level to maybe start to tell you that we're moving down. I'm not seeing it yet, but that's what I'm looking for. All right, Aussie yen. Now, I just want to tidy things up here at the moment. Still the question. I know there's lots of lines, so let me just get rid of all these lines. We can put them back in. The big question is what's happening with these two tops up here? Are we holding there for a major double top to move down? So I've been relatively bearish, looking for the opportunity to trade down. At the moment, we're actually right at this monthly top. Great level to sell at, this monthly top here. The weekly trend is just holding its uptrend in terms of there's a higher top, higher bottom. So this could come up to retest the high of last year and the high of the year before. That's last year's high, year before's high over there. Or we could not get up there and we could hold at this top here. So just putting in a few, we just need the high level at the moment. And get that level. That's the level that we're at the moment. 9765 or 9766 is the number. The question is, and there's another little area here, but this is the one we're holding at all day at the moment. Are we going to hold there to once more move back down? We have had this move down that way. We held double topped at 79% level, and we've come up, taken a few stops out above these highs. So a fraction above the 79% level, and we're right at this top over here. So are we going to hold here, or are we going to come up and test the high of the year? There's not a great room, if you're not already long, there's not a lot of room left. You don't want to be trading into resistance to buy, and there's not a lot of room left to the major resistance up here. So in my mind, you're either doing nothing, if you're not in the market, you're either looking for this to reverse, or you do nothing because it's too late to get long at the moment. To get long, this would need to have some form of pullback within this 4-hour range. And then, can it come down 62, 79% area and then come up? This is not where you want to be buying for a number of reasons. I can show you with a couple of fibs of the previous ranges. There's this range here. If you go from low to high, we're at the 127 extension. So low to high pullback, we're at the 127 extension there, just short of. And if you switch the fib around there to there, we have another 127 R level there. So two 127 levels in that area, depending on how you're drawing your fib. Okay, so plenty of reasons to see why we'll be coming under some selling pressure in this area. So putting, once the news passes today, if we start to see a reversal up here, it's a very logical area to look for a reversal. It's worth putting in this high here, 97,578. So today, go back to the day chart. If we close back below resistance today, that's going to be a signal that we're holding there. And then you need to look for whatever is your strategy to sell. If we close above here, we're probably coming up to test last year's high. So depending on how the market reacts to the news today. Right, so you can monitor that. At the moment, it's just hanging around that weekly high at 97.66. Aussie, it's not doing too much. That's Friday's range. It's just kind of almost in the middle of Friday's candle range at the moment. Last year failed up here at the 68.05 area, got a bit above, and I've been monitoring for this to come back up to this area. 7% levels at 68.21 and the resistance area at 68.05, but it's just not doing anything at the moment. So I'm just waiting. It's the new year. People are still coming back from holidays. The volume may be low on trading, and we're waiting for some news items to come out from the US. So, if we did get up there, we're about 100 pips away from that area at the moment. We can definitely get there today. So that's an area that I'm watching. Just depending on whether we can get up there. Looking at the fact that we've sold down. So my stance really hasn't changed from Tuesday. I'm still waiting. Looking for that as a sell-off, a rally, and a move down at the moment. So just waiting to see if price action can create that kind of structure. New Zealand yen. I just get rid of a few lines off here at the moment. Just want to be able to show you where we are historically. To the left there, we're at very high levels. It's been very range bound. It's just holding its trend up at the moment. This is the monthly chart. It's like one good month up, then the month almost trades all the way back down from the previous month. Now we're back up within the range of the previous month. Are we going to continue up, or are we going to stall close to the highs, the high of last month, to then move back down? Weekly trend is holding its trend, another high bottom coming in at the moment. So we could give last year's high a go. But again, if you want to be a buyer on the New Zealand yen, you really should have been looking at, that's the last weekly higher bottom to higher top. This is the next higher bottom area here. This should have been the area that you're looking to get long in, not as you're approaching last year's high. So there is a very good resistance area here that we've been trying to move above and then falling back below, 1919. See how we double topped here. Now we've moved above that area at the moment, so you might want to move that line up to this area here. And we want to know if price can start to commit and hold above this area. 94.26, that would be a buy level if you wanted to get long. You can see a set up to buy off that level. That would be the area you should be looking for pullback for buy. If you're a seller, because you think we're at such high levels, we're very close to last year's high, then you could be looking at the other range, this sell-off down here, and monitoring to see what price does at this 79% level at 90.68 and these highs here. If we were to close back below here, that would be a very strong sell signal. So if you're to the buy side, any pullback at the moment needs to hold at 90.42 to hold for a continued move up. If we were to close below 90.42, that would start to be a signal that, okay, we're back into the sell zone, because we're coming up at the moment. We're almost tagging these highs that we failed at late last year. 91.028. If you want to be real aggressive, you could be watching 91.028. It's pretty much the 91 level. Later in the day, if we come up to 9100, in fact, we've gotten a little bit short there. On the 50-minute chart, this is looking negative, so we maybe already failed just short of this resistance area. But the volatility of the news a little bit later in the day may give you the opportunity to spike up there. But if we no longer spike up there, we may well be failing up there. And as I said, for the buy side, 90.42 is where the buyers should be holding control. If they don't, then we're probably going to have a reversal back down. So if you want to be aggressive, putting aside the news at the moment, we're getting a swing point break. We're getting a trend line break. 4-hour charts. Come the top of the hour, this 4-hour candle is going to finish. So if you get a break of the candle, that would be a reversal down to the downside from a very clear known area of resistance. So you could be looking up here for whatever your setup is to sell. If you want to be aggressive, maybe want to wait till the news comes out later in the day, as I've been saying, but we're definitely in a sell zone there. So can you see your setup to sell? Or do you need to wait for a clear, maybe close back below 90.42 before looking to the downside? All right, that's my thoughts on New Zealand yen. Just want to know what the Aussie yen's doing. It's just getting back below that top. New Zealand dollar, very sideways at the moment. If you go to the day chart, it's doing what the Aussie's doing. It's just in the middle of Friday's trading range. Okay, it's holding at this day chart top over here, and can no longer get up to this day chart top up here at 62.73. Any spikes up today to 62.73, that's clearly where sellers are. All right, it got rejected there last week, Wednesday, Thursday, Friday, and we haven't been able to get up there this week. So after the sell-off in December, late December, 62.73 is pinning the market to the downside. All right, high time frame trend remain down from the monthly chart scale. This could be a major monthly top forming for a long-term move down. So at the moment, any move back to 62.73 after the news today, if it continually holds there again, that's the level where the sellers are taking their positions for maybe the longer-term move down. Okay, so that's what I'm watching there is the 62.73 level. At the moment, price action is pretty horrible. So looking to the outskirts for the sell side at 62.73. All right, dollar CAD. I was looking down in the 62.79% area Tuesday. Never quite got down there. I could, well, you'd have to readjust this fib now because we've got another bond come in there, but just holding at the 133.79 level. So if you go to the weekly chart, we're actually below this weekly low. Just managing to hold below there. But the big question is, from the monthly scale, we do have a higher top just up here. Like I've been discussing in the dollar index, are we forming some form of left shoulder inverse head right shoulder here? And any good positive news for the US, we'll see price move above this weekly area. There's just holding the market at the moment. We're trying to get above there, but it's just getting held. Might be, this could, well, we do have a higher bottom, higher top scenario here. So we do have a day chart trend to the upside now, although it is being held still at that weekly level. So it's a bit difficult to engage at the moment because you don't want to be buying straight into this weekly resistance level. If it could pull back within this range, to the 62.79% area, that would be worth looking at. And if you could see your setup in this area to get long, and then you can manage your trade when we retest 133.79 once more, then at least you'll be at break even and you can see whether we can break. So, can we pull back to this area, hold? Can you see a setup in here to buy for a go up breaking above 133.79? All right, dollar franc, this is how I mapped out on Tuesday. Never quite got up to the 79% level, just held at the 62 level. So remaining week, that is 85.52. It's the monthly low that we've broken below. Let's just go to the monthly chart. It is, can't really see it. I'm gonna have to tie things off a bit for you. This monthly low here is holding the market down. broken support becoming resistance at the moment, and this week we're not able to get up to there. So we might get driven up to there today. So I can just put back in my markings. It is well worth still watching to see if this will come up to 85.52 where the 79% level is of Friday's range. Does that area hold, offer you the opportunity to sell in line with the dominant trend, which is overall down? Okay. And as I was saying on Tuesday, some form of maybe that could be a left shoulder head, right shoulder forming on this level based on the 4-hour chart. All right. Proved twice on the 4-hour chart that it doesn't want to hold above that level. So any further test there could be the opportunity to sell down from that level on your setup to continually trade down. All right, so let's get into gold. This is where I identified support. And this is where I was identifying major resistance up here and minor resistance here. And price, since I drew it in, hasn't really done anything other than just continued to dribble to the downside on gold. So really at the moment, depending on the volatility that comes out from the news later in the day, this is weekly supports that we're just dribbling down towards 2009. And you've got monthly resistance up here at 2070 to 2079. So those are really the two boundaries to see if they can be traded into and held after the news today. All right. Just holding its downtrend here at the moment. As I said on Tuesday, we are forming a lower top after massive rejection, rally back up, held at the 1, 2, 3 monthly highs. Lower top forming on the weekly. That's very negative, really. But we are stuck between what is monthly resistance and weekly supports. So over the next few trading days, back to the 4-hour chart, price action is going to touch one of those areas, closest areas of support. So what does it do at support? If you start seeing it holding on the 4-hour chart there on gold, on support, I would anticipate then that we're probably going to, be range bound. If we do come down into here and hold, I would anticipate that we could then move back up to here. All right, so just a patience game there on gold at the moment. Weekly trend has put in a lower top. The day trend, as I said on Tuesday, it's put in a minor lower top here, another minor lower top there. At the moment, it could just come up to put in a further lower top if it wants to move up. And that's how I had the fib drawn on Tuesday. And I was saying on Tuesday, look at the 79% level, because to the left here, there's a number of 4-hour resistance areas. All right, so coming up to 2053 would be a good area to watch for resistance. The stronger area, if we continue up, is this monthly area up here at 2070 to 2079. So you could look for that to ultimately come up to here and then potentially turn over. All right, so that's my thoughts at the moment as we're waiting for the US CPI news. Don't disregard this CPI news. Yes, nothing may happen. If it just comes in print, the market may not be too volatile. If it comes out of print, I'm sure it will be volatile. So what we're definitely seeing, since Tuesday, where we were a little bit range bound on the M pairs, maybe holding at top of a range to move down, we haven't had a breakout up the range. In fact, I haven't gone through the dollar yen tonight, so let's go through that. And as I've been showing you on pound yen, euro yen, looking at the monthly range and where price is positioned relative to what it did last month. Doing the same thing here on the dollar yen. I haven't quite got to the 79% area. We're in the 62 to 79% area here. Hasn't been able to trade above last week's high this week. So we could be actually holding here to move back down. I'll have to wait to see what the US news brings. All right, so I'm just monitoring that monthly range. It could also be, it's a very large range that we've had. I don't know how far we can get up this range this month. That's why I've moved to the monthly range at the moment. Last month's candle. Last month's candle. This really need to position my fib. Last month's high is there. All right. So today chart, not able to test last week's high, which is here. And that's a big, strong rejection. So we're just trading back up inside the range of that candle. A little bit short of the 79% level of last month's high to low. And we're at the 79% level. Well, it overlaps with the 79% level of this range from the double top. So that actual overlap of the 79% levels, round about 146.59, 149.60. That would be a very good area to watch if we get up there for a possible failure this month. But at the moment, it's not able to take out last week's high. So I would be monitoring at the moment. Just want to see what it's doing on the 15. It is getting supports there at the central pivot point. But of this whole range here, depending on what price does today after the news, just want to get rid of that fib for the moment. This is the rejection on Friday, and then we traded down Monday. We're coming back up here inside the rejection part of the candle up here on Friday. So if we start to move below, if we close below the 79% level today, so go to the daily chart to just monitor the candle. If we close below the 79% level today and shows that's a very large candle yesterday. If we have a small inside day closing below the 79% level today, just to break that inside candle tomorrow is going to confirm the opportunity to trade down. All right, so depending on what the news does, news may just blow price straight above the high. But if we have an inside day today getting back below the 79% level, then that's very suspicious, like maybe the upward move's finished and you may be looking for an opportunity to get short there. So having to watch to see what today's candle does and how it finishes based on the inflation figure coming out today. All right, obviously we had a move up yesterday, but that could just be traders squaring some positions off from the short side ahead of the news item coming out, not wanting to be in the market. All right, so be aware of CPI data coming out tonight from the US, 11:30 p.m. Queensland time, and then tomorrow US CPI data coming out. Well, it's PPI data tomorrow, but both of these items are inflationary figures. So these are definitely going to affect the market because then it's going to give information to the Fed. Will they be, if you say inflation fall nicely, that will give more fuel to the idea that the Fed could be cutting rates. That's US dollar negative. Or if inflation goes up, that's more fuel to the fire to say maybe the Fed hasn't done enough work yet. All right, so don't disregard those items. So 11:30 tonight, my time, and 11:30 tomorrow evening as well. Those are two big news items for this week. It's worth having a look at the news items coming out for next week. Canadian CPI data next week, Tuesday. UK CPI data Wednesday, 5 p.m. Aussie employment figures 10:30 in the morning on Thursday. those are pretty much the big ones for the week. So I like to be almost a week ahead of myself, knowing what's coming out. I don't really trade the Canadian dollar, so this inflation figure for the Canadian dollar, it does bother me. But if you like to trade the Canadian, then you need to know that that's going to be a very contentious day next Tuesday. So Patrick, I'm just reading your comment or question. So you're asking me, after the CPI data, if the market is volatile and it reaches a buy or sell zone, how long should you wait for price to settle before we enter the trade? Well, that's the big question, isn't it? Usually for me, depending on what level it's at, if I like the level, so for example, let's say the Aussie, I like the 68 level. So if price was to get up there real quick, and then I just watch the 15-minute chart, and if I'm just starting to see it hold down a 15-minute chart, then that would be my opportunity to sell there. So I tend to drop to the 15-minute chart, and I start to ask myself, how is price dealing on the 15-minute chart? Is it holding there, or is it continuing to move above the level? Or has it moved above the level? Let's say if we're looking at sell level, has it moved above the level, but now has the 15-minute chart closed below the level? So has it been trading above and then closing below and starting to show some wicks on a 15-minute chart at the level, and vice versa at support? So that's what I tend to do. Sometimes if it's a level that I really like, I just pull the pin and just sell it or buy it at a level. And depending if I'm wanting to have a short-term stop or a positional trade stop, if it's more of a position trade that I'm looking at, let's say we talk about the Aussie at 68. We couldn't trade up to 69 at the end of the year. So I'm at the moment, I'm quite happy to sell up here with a 100 pip stop, looking for a long-term move back down to this area down here. So it all depends on what your mode of operation is. Are you looking for a tight stop, short-term trade, or a long-term trade? And you're quite happy to have a wide stop. So it all depends on what your mode of operation is. But if you're wanting to get a tighter stop, I tend to look at a 15-minute chart and start to see how the candles are closing on a 15-minute chart. Have we seen a level hit? Is price now false breaking? And is the 15-minute chart giving me a clue that we are now holding and wanting to reverse? Okay. Yes, sometimes price can reverse real quick, and you can't wait for 15-minute candles to close because price is moving too quick. In those situations, you just have to make a decision. Do you want to be in? And where are you going to put your stop? And if you can't handle that kind of volatility and, decision-making process when it's really volatile, don't trade at those times. That's what I would suggest. So I tend to have a clear picture in my mind ahead of time. I really like this level up here for the Aussie. So if price was to get up there, I'd be happy to trade there. And if the trade's either going to work or it's not, I'm not going to risk too much on the trade. So if it doesn't work, it won't bother me too much. But then if it was to hold here and trade all the way down to the low of last year, that would work out very nicely. I mean, the high of the year could form up here. So that's why I will be prepared to risk something on my account in a volatile time to, execute a trade and see how it runs. But I wouldn't be risking too much on the trade. Then if I started to see it reverse, and then tomorrow, if it wanted to continue down, I could add to my position, look for another opportunity to get in tomorrow. All right. That's how I would look at it. All right, no more questions. So just to give you a heads up what's happening from me next week. Heading over to the webinar page if you want to join me next week. Next Tuesday, more analysis from me so we can pick up and see what price has done since the inflation data release. Third part of the smart money concepts on Wednesday. All my webinars are 8 p.m. Sydney time, and more analysis from me on Thursday. So my webinars next week are Tuesday, Wednesday, Thursday, 16, 17, 18 at 8 p.m. If you want to join me, just come over and register. Yeah, Patrick, 50-minute time frame is a good time frame. Sometimes price action can be very volatile. In the last year, when we were dealing with CPI data, a 50-minute candle following the news could be 100 pips high. So it does depend on how volatile the news item is on the day. And if you're dealing with a 100 pip candle, I tend to then I just wait. I just wait till the volatility subsides and then see how I can construct something after that. See where price is failing at or moving from towards, and then look for an entry when the volatility has subsided a little bit. All right, just do the best you can, but you have to first of all manage the risk. And if price action is just whipping around and nothing's clear, then I don't trade, because then I'm just kind of guessing. And when I'm guessing, I'm adding to the risk. So always monitor the risk first of all. If it's clear, getting a clear sign, trade. If you're not getting a clear sign, wait until you get a clear sign. That's the thing to do. And with me as well, if you're in Australia, I don't know where you are, but I'm in Australia. 11:30 tonight, I'll watch what the news does. But if nothing's clear soon, it's bedtime for me. I'll just pick it up in the morning and see where price is, and then see what maybe sets up tomorrow. All right, that's how I'll approach it. All right, then, everybody. I just want to wish you a good trading for the rest of the week. Have a great weekend, wherever you are. And I look forward to seeing you next time.